Good morning, good afternoon, and good evening, depending where you are on the planet. And welcome to the Thursday, the 8th of September, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. Welcome, Clinton. Say hi if you're in the chat. The chat is just below the live streaming that you see there on the homepage. So say hello if you're on the webinar live. It's always good to know the guys are on. If you have any questions, please do pop them into that chat as well. So I'm going to go for an usual regular run through in here today, guys. Calendar. Hey, Phil. Hi there. I'm going to go through the calendar, see what we've had, see what we've got coming up. We'll take a look also at the macro fundamental events, what's going on in markets from a macroeconomic fundamental basis, risk basis, a geopolitical basis, to see where the threats are in the market, the risks are in the market going into today. And then we'll also take a look at the charts to see what's going on the charts and where the prospects are. Not great call on the charts yesterday. First day back on the webinars, staying bearish with the general bear trend. Little pop higher across the board on stocks. Got it right on this, and the oil broke that support and plunged lower, but stocks in here reversed some resistance levels and pushed higher. We did mark out the upside levels as well. So when we got above those, the market certainly accelerated yesterday. So I think going into the day, my view is going to be kind of binary. I've got no strong view going into the day. You know, you've had bigger picture. You've got the negative pressures that we've seen since the mid-August sell-off, and then in the very short term, you've got the positivity from yesterday's short-term reversal patterns. So it's going to be really tricky going into the day. I think you have to play it from a very fluid point of view. Don't get tied to any kind of positioning and thoughts, because you know we've got kind of dual influences at the moment from yesterday's positive reversal signals, which I'll talk about, and then there are obviously the bigger picture negativity that we've had from the sell-off that we're seeing from mid-August. So question from Clinton: Hi Steve, we're very interested in the overnight price action able to pierce and hold above the high of yesterday and hold. Does it suggest weakness like our topping out on Thursday, or was it more like consolidation for a break? Yeah, good question. I don't have an answer to that, but we'll come to the charts and look at it. Anything in particular? You looking at S&P or NASDAQ or both on those? Yeah, same as Fridays. Yeah. Yeah, I'm not 100% on this one, Clinton. I'm leaning towards this is potentially a base. You know, if you go and take a look at my report from yesterday, I'm still holding on to a negative outlook. I'm still looking at negative. If you look at the report that I uploaded last night on the in the trading room, so go take a look at that. I'm coming into this more of a negative feel, but I'm really open to it flipping back positive today. I think, you know, you did see some positive signals, and I'll talk about not only those positive signals, you know, give them the correlations, the high correlation we have at the moment. Those positive signals came across the asset classes. So we've had turning points on oil. Sorry, not oil, forget oil. Oil stays negative. We've had turning points on the dollar. We've had turning points on treasuries. So it's interesting. Okay, this is a part of the reason. Yeah, so I'm still coming into this negative, Clinton, as you saw from the report from last night. And we didn't really have any overnight action, right, to reinforce the upside that we saw yesterday. However, I'm not going to say never say never. And, you know, even though I'm kind of hanging on to a bearish theme going into today, if we take out yesterday's highs, I think it all just goes up again. Yeah, so that's kind of the elevator pitch of what I'm going to talk about today. Let's get into the webinar, though. I'm a little time constrained in here, guys, so if I'm rushing through, please bear with me. But you can always catch it on the webinar if I say anything too quickly. I do tend to speak fast anyway. Right, let's take a look at the calendar, what we have, what we've got coming up. Right, critical today. We have the ECB interest rate decision, okay? So we've got that coming up in 40, is that this correct, 41 minutes time? That's not right, is it? Let me just refresh this. I don't think I've got this on. Yeah, we're on GMT -4. No, maybe we are. Maybe this is correct. Current time state. Okay, well, this is, yeah, I think this is right. Yeah, yeah, this is right. 41 minutes. Yeah, 3:30. Yeah, this will be right. So we have ECB coming up anyway. Okay, we're certainly going to have to watch out for that. You know, it's not necessarily going to directly impact markets that we're looking at, but nevertheless, you know, it's certainly important. You know, the consensus at the moment is probably, well, there's a mix in here actually between 50 and 75 basis points. I've got a load of articles on this. So EC's margin of high economic force state the spotlight. Traders more or less see of 70. So pretty much 75 basis points is priced in. It's kind of historic for the ECB on that, but some are expecting only a 50 basis point index rise. So we're watching out for those certainly going into today. So that's going to be a key spotlight. If they go, they probably need to go more hawkish. It's going to have impacts on the euro. If they only go 50, the euro probably sells off. That sees dollar strengthening, probably then sees weakness in equities. So I think this could be have an impact into stock indices going into today. If they don't go hard enough, I think equity. I think then you need the 75. If they only go 50, I think the stock indices in Europe will take that as a negative because they're just not tackling the inflation that needs to be tackled. So 50 basis points will probably be seen as a negative. That will probably see European equities sell off, probably pull US equities down with them, and then then we'll be sitting on the more negative tone that we've seen from August continuing. We probably need the more hawkish tone from the ECB. So yeah, a market's pricing in 89% chance of 75 basis points. I think they need to deliver that. Okay, so that's going to be interesting. That's going to be our first real focus going into today. We've got that, as I say, in about 40 minutes time. So is that right? That seems, for some reason, I'm going to just double check this, guys, because let me just go to another calendar in here. Let me go to the Forex Factory calendar just to double check, because I know they've shifted the time on these. So ECB press conference. So this is, let me just change it to in here, GMT time zone, GMT +1, synchronized time. Okay. Let me just go back, just check it on to my time, Wednesday 8th. So we have ECB press conference 1:45. Yeah, they have kind of shifted these times around, right? So yeah, odd in here. Okay, and decision at 1:15. So they've definitely shifted the times around on these. More recently. So so that's going to be important, guys. So I think, I know a lot of our traders, a big percentage are trading out of the US, and obviously you're trading US products, but this is an important rate decision in here. I think we really need to focus on it. Okay. So we're certainly watching that. Later on today, more US centric, is we have Powell speaking. So I got that 9:10. That's Eastern, right? 9:10 Eastern, and then we have Lagarde speaking as well at 10:15 after the interest rate decision. That's from the statement. And we get crude, which is worth heating oil, so watching out for those as well. So ECB and Powell speaking today are going to be the main focal points. Let's have a look at 5 things you need to start today. Well, the Federal Reserve battles bring inflation. Sorry, guys. Focusing here on Goldman Sachs expectations of a rate hike, 75 basis points this month and 50 basis points in November. Nothing we're not seeing anyway, right? And Brainard said U.S. central bank will have to raise interest rates to restrictive levels. So a more hawkish tone continuing to come through. And if we look in here, this has actually climbed higher. Remember yesterday for the September meeting, this was down in the 70s, I think. And now we're down above 82 and only an 18% chance now of a 50 basis point hike. So starting to nail on. I'm surprised this is not higher. I said that yesterday. I'm surprised it's not even higher in here anyway, because it feels to me that they're almost certainly going to go for the full. ECB, obviously we've spoken about that already. 75 basis points expected in here. California prices once again didn't break despite being stretched to the limit. Due to the heat wave. Dollar said rises in here. Well, dollar actually has dipped back lower. It's started to bounce a little bit, but generally the dollar is actually slightly lower over the last 24 hours. And so, having rolled over yesterday, we have a slight bounce in here on the dollar. The pound continues to be really weak. I'm going to talk about that in a minute as well in here. Basically, pushing through quite big plans to restrict the rise. We're having a meteoric rise in fuel prices, power prices in here in the UK. And to counter that, they're going to freeze them. So there's some breaking news on that over the last hour. So UK PM Trust announces a cap on energy bills for the next 2 years. Typical households pay no more than $2,500 a year on energy bills. So even though they've leapt massively higher, they're capping those. It's going to cost the government significant amounts. We're talking about 170 billion. That's obviously being funded by the government. That's putting negative impact on the fiscal position, the government position on finances, and that's been negative for the pound. So the dollar's strong anyway, right? So the dollar's staying higher. But yesterday, the pound versus the dollar hit levels not seen since 1985. We took out the 2020 low yesterday, not hitting levels seen not since 1985, probably before many of you were born, not before I was born. So the pound under negative pressure. I mean, obviously a lot of that is dollar strength across the board. However, the pound is particularly weak as well. And again, another article in here, Britain borrows bigger gain to ease energy shock. Okay, so that's highlighting that. Energy bills caps. Okay, what else we have in here? 5 things. We've kind of completed that. So just running through some headlines. Wall Street Post biggest daily gain in a month. It was a big day yesterday, having been a fairly quiet start on the day, as bond yields fall. So this is the markets correlated. Bond yields going lower. Obviously, NASDAQ outperformed lower bond yields. Remember, lower bond yields, lower interest rates, better for growth stocks. Growth stocks equals, well, not equals, but NASDAQ, full of growth stocks. And so NASDAQ outperforming yesterday as yields went lower, so lower long-term interest rates, better for growth stocks. So growth stocks outperforming yesterday. So biggest daily gains in a month, and then in here stock, and then overnight, and the future stocks drifts. So we're waiting on the ECB rate hike in here. Retail shares in Europe sink on Primark, and then Goldman's. We spoke about this already. There was in 5 things to start your day. They lift their forecast for Fed rate hikes, and we spoke about that yesterday. Remember, going back to the CME tool in here, if we go further out, the peak in rates by the end of the year is now flagged in at 375 to 340, but staying there, look, all the way through. We spoke about that, 375, 340, right the way through. No hike. We're at to June, still 375, 340, the peak. Still 375, 340, the most likely peak. Still 375, 340 at July of next year. What else we have on the headlines? So we spoke about stocks drifting overnight, focus on the ECB. EC's margin of high economic forecast state spotlight. So the forecast as well, that's going to be important that they give us as well. So we're watching out for that. I'm going to put this up now. I think we get the decision in here. So I'm just going to go to Twitter in here and bring up... so you got it in your stream anyway, the Twitter from... this is from Trade Day. That's no good for us. I'm not going to be posting anything in there. Let me see if I get Live Scoop. Okay, Live Scoop. So I'm going to leave this up. I'm pretty sure we haven't had anything yet. So you can obviously get this if you've got your Squawk playing as well, but you're probably not over the top of me. So in here, I'll keep coming back to this, okay, to see if we get the breaking news. So someone remind me actually it's literally, I think, we said at 1:15 now, right, when I went to Forex Factory. Yeah, they've shifted the timing on this. They used to, this is definitely a different timing. 1:15, then press conference at 1:45. Yeah, so we don't have that for another. For me, 1:15 is 30 minutes from now. Yeah, they've shifted these timings. I'm going to look into that, okay? I'm going to look into that, why they've shifted the timings, if that's going to continue going forward. So we'll be off the webinar by then. So again, focus on the ECB in here, waits on potentially record ECB rate hike. In here, 75. Morning, the 75 basis point club, same thing in here. We've spoken about the UK capping energy bills. Britain borrows bigger gain. We've spoken about that. In here, Fed's Mester warns high rents peak mean inflation may not have yet peaked. So generally speaking, we're looking for the inflations have probably peaked probably globally, probably in the US. If we go and look at Mester, remember this is a useful resource as well, guys. So if we go to ITC markets, you've got this Hawk Dove cheat sheet. I can put this into the chat. And also, I don't know, so you should see that in the chat now. I'm also going to the CME tool. I'm not sure if all of you guys got the CME tool. It's fairly easy to find, but I'll put the CME tool in the chat. But this is a good resource as well, guys. This Hawk Dove sheet in here. So this is from ITC. This is another Squawk in here. So they've got this. I find this really useful to refer back to. So it tells you whether they're dovish or hawkish. It lists them out. Dovish at the top here, hawkish at the bottom. See Mester in here, down here, hawkish, right? So kind of no surprise. When a hawk is hawkish, right, kind of big deal. When a dove is dovish, kind of big deal. It's when you get the doves being more hawkish or the hawks being more dovish that it's kind of more of a significant statement. It might show a shift within within the Fed, within the FOMC, right? So in here, sometimes if you see one of these guys up here being a little bit more dovish, more hawkish, or the doves being a little bit more hawkish. Yeah, Kashkari was always the ultra dove, and now has moved more into the center actually. But as I say, Mester in here, who we're referring to here, Fed's Mester. And here is more of a hawk, and that is obviously more of a hawkish statement, right? So, inflation may not peak, still being strongly hawkish on inflation. So no surprise when a hawk said something hawkish. Let's take a look at what else we've got. Oil still down after a big drop yesterday. We spoke about the important levels, right, yesterday. I highlighted the levels yesterday, took out those levels in here and accelerated lower. Bit of a dead cat bounce overnight. China concern. So overnight as well, news in here. We've got further antivirus lockdowns out of China. Okay, obviously sapping of demand equals less of a demand for oil, global demand that is, and then lack of a global demand for oil, lower price. Oil prices fall further as China extend COVID curbs. So oil down on that. Now that's obviously positive for inflation. It's positive for risk assets as well, right? So not only did we get the rollover yesterday in treasury yields, right? So they moved down to lower yields, which obviously helped global and US equity markets. But we also saw oil breaking lower. Okay, so lower oil price, less of an inflationary pressure from oil, and that therefore positive for riskier assets, i.e., stocks. What else we have in here? So European markets overnight in here. I need to expand this one out, but we're kind of mixed, but kind of slightly up, slightly down. FTSE in here slightly high. See the DAX, that's the German index, slightly lower. Generally speaking, slightly up across the board in here, or mixed to unchanged. So slightly better in here. And then if we look at where we are in the US, obviously, we got the strong rallies in here over yesterday, 1.5% to 2% up across the major indices, and we're slightly better in here. But I mean, we're talking slightly better in here overnight thus far. Looked at the forex factory, looked at the pound. We've looked at, okay, I'm just going to highlight here on a yield basis. This is the US 10-year yield. I hope you can see that. Let me make this a bit bigger. Okay, this is US 10-year yield. So obviously been in tracking higher since we saw actually since the early part of August in here, where remember stocks didn't really roll over till the middle of August, but in here from the early part of August we've been tracking higher in yields. It's the US 10-year yield, but then yesterday a move lower in yield, right, and a notable move lower in yield. So we moved from where were we yesterday? So yesterday we were up at 2 days ago we were at 335 high. Yesterday we came to 336.5. Actually, if I put this onto a candlestick, there you go. Okay, so lower yields in here helping equities go higher, particularly helping out the Nasdaq. We've spoken about this. Let's take a look at the charts. And sorry if I'm rushing, guys. I'm a little bit on a time constraint in here. So you can see really positive day in here. We're starting off in the S&P 500, yeah? It's a bullish outside day. What's a bullish outside day? It's when you get a lower low and a higher high. So a bullish outside day, very impulsive, positive day. Took out the previous day's peak in here. And then, we noticed this yesterday as well. Held this trend line almost exactly yesterday, okay? Almost exactly held the trend line. Dipped down to this trend line. This trend line comes off the lows from the 17th of June through the low from the 14th of July. Basically exactly held that trend line. So it held that important support factor and pushed higher. As Clinton says, a bit of a kind of a bit of an overnight in here, a little bit hesitant. But I don't think we're at the point we were last Friday in here with this failure. Not at the moment. I'm still clinging to negativity, okay? But if we take out this overnight peak, and we failed below this peak up here. So this is an important high over here. From where are we? That's the 2nd of September. That peak up there is 40.19 and a quarter. So the overnight has been 39.96. Okay, but you can see we kind of had this dip lower and it's fading again, right? I'm still hanging on to a negative theme from this whole sell-off, right? This looks like lower lows and lower highs. Yes, it was a really strong day yesterday, but looking for negativity. If it breaks this little overnight low, it certainly looks negative to me. And that little overnight low is 39.69.75 down through there, and then I would immediately look at for these impulse points around here, 39.48, and then down towards like 39.30. Okay, so I'm clinging to a negative. If it takes out the overnight high 39.96, I think this is bullish. And then I think it quickly has a go at that high up there, 40.19 1/4. If it takes that high up there out, then you've got down here what you could argue is a quadruple bottom, right? So if I go and look at the shapes, I'm not going to draw all these lows in here, but you kind of, oh no, that's not very good. But you've got all of these lows here, right? So 1, 2, 3. You could argue 5 points at the bottom here. 1, 2, 3, 4, 5. If it takes out that high, it's a multi. And then remember that high there. That's the one that Clinton was mentioned on the webinar yesterday. That's the failure peak there up at 40.19 1/4. Respecting that peak there, which was at 40.18 1/4. Okay, so it just pipped above there and fouled. So that's a massively important area. And the market looks hesitant. But remember, it was a really big update yesterday. Biggest update, what did they say? Biggest update for a month or whatever. A multi-week high in here yesterday. It was never going to take out that peak, at that point, yeah? We've got Powell today as well. If Powell gives any hint of like, oh, yeah, things may be slightly improving. We're seeing a slight improvement in inflation. Any kind of tone like that, boom, this is up through these resistances all the way up here. And I think up through yesterday, the overnight high is enough to shift me back to bullish, 39.96. If it takes out the overnight low, I think it stays bearish. So I'm going into this 65% bearish. You don't get tied to a position. You've got two really big conflicting factors in here. You've got the bigger picture, all the negativity from this whole sell-off that goes back to, I need to zoom out a bit more, but it goes back out to mid-August, right? You've got all the negativity from this, and then, there's Jackson Hole, right? And then you've got the positivity from yesterday's rebound, the fact you took out this high here, that you got a potential 5-point, bottoming pattern in here, okay? You got all the potential for that. Until it takes out that basically 40-20, right? Then we're not getting the positive signal. But nevertheless, the threat is for a challenge there. I'm kind of running into today 65% bearish, but it takes out yesterday's high, you're flipping bullish quite quickly. If it takes out 40-20, boom, we could really accelerate because you've got a lot of not longer term, you've got a lot of hedge fund shorts in here basically. We've got hedge fund shorts in here from the last 2.5 weeks, and they could easily get squeezed out if we take out that 40-20 level. All right. I'm going to do rapid look at the NASDAQ as well. NASDAQ didn't come off the same trend line. The trend line was surrendered. But again, a bullish outside pattern yesterday. Again, the hesitancy to qualify that overnight, sideways in here. But, if it takes out yesterday's low, the overnight low, looks negative for a challenge down into here towards 12,150. If it takes out the overnight high, then it's this peak up here. If it takes out this peak all up here, 12,461 1/2, then it all looks far more bullish. So similar kind of look there. I'm going to a quick nod to oil. I'm going to skip gold in here today. Unless anyone's desperate for gold, put in if you're desperate for gold. But just looking at oil, it took out, we looked at these previous lows, but also this more important low over here. So these lows in here, 1, 2, 3, 4 lows you had put in respecting this low over here from the 15th of March. That low was at 84.10, and when we took out that low, massive acceleration, and it looks really vulnerable. This looks like a massive top on oil. So if we zoom out, actually you can't see, it's not a continuation chart, but the oil rally, coming in all the way from last year, right? In here, this looks like a much bigger top. It's not quite, but it's a bit like a head and shoulders, right? You've got shoulder over here on oil. So you've got kind of like shoulder here, not best placed. Oh, sorry guys, I can't move it. Oh, there we go. Can I just climb that? And then you got, I will get around to doing this. I'm going to do it. I'm going to do it no matter what. You got like a head here. I didn't do that very well, did I? Can't grab the middle of it either. I will get to this, guys. I can just feel people switching off their monitors. There's a head. And then here we go. Go. I was never any good at art at school. And then, tentative kind of shoulder over here as well. Why didn't I not pick that up? Oh, no. Here you go. Tentative shoulder there, right? And you could argue multiple shoulders, right? 1, 2, 3, 4, like 5 tentative shoulders here, and multiple shoulders here. 1, 2, 3, 4, almost 5 shoulders here, and the neckline, is long gone now. So we've gone on the next line. We'd run across here, right? Quite simply running across there, and boom, acceleration. No surprises of acceleration as it breaks. Yeah, I mean, that projects, right, from a high here at 115, the point here is around like 85. That's a $30 top. And it's projecting $30 down from like 87. It's down into here, 50, 55, 60 area, right? That's bigger picture, not today, clearly. All right, so, and then dead cat bounce overnight, go to 30 minute, hardly any bounce, yeah. So this looks still really negative. I think, the bounce we have seen in the last hour or so, looking to fade into that. So another down leg potential there. All right, guys, I'm just conscious of time. I will literally give a nod to gold. Gold popping higher. Why gold popping higher? Because if we go across dollar index, there's the dollar rolled over. We've already spoken about why is the dollar rolling over. There's treasuries. Treasuries up in price, down in yield. We already looked at the yield chart. Jumping back to the yield chart. Where's my yield chart? No, that's not it. That's not it. There's my yield chart. So lower yields. Okay, lower yields. Going back in here, higher prices. This is a 10-year note. Okay, actually 10-year note interesting in here. Potentially. Look, really important. Draw off these 2 points here. Third touch. Approaches, nearly get a touch there. Fourth touch. Reverses, not yesterday, reverses this morning, right? Reversed up through it this morning, yeah. So really important statement from the Treasury in here. Reversal of that multi-touch trend line that comes down all the way from the beginning of August. Remember, the equities didn't roll to the middle of August, okay? So that's a really important trend line reversal on Treasuries. What it also means, though, is then what? Go take a look at the dollar. There's the dollar, again, rolling over. Big negative candlestick, failure candlestick yesterday, takes out the day before's low overnight today. Again, negative here, okay? If we go put on, not the same trend line. This trend line comes the same as the equity trend line. Through here, reverses the trend line. Also a Dow theory reversal below the low from Tuesday. Okay, so again, reversal there. All of this, these multiple reversals, right, we're seeing because of the correlations in markets, okay? And then obviously then for gold, what does it mean for gold? We get a bullish reversal on gold. And it's just taken out the peak this morning. Look, so a dip and a rebound. You've got double bottom down here. It's taken out the interim peak. We can see that on the 30-minute. So there's the double bottom. And we've just nudged above that peak there, look, in the last 30 minutes. So you've got big double bottom here on gold, pointing up. Can only be long on gold. Right, that's all I've got, guys. No questions? All good? Can I get some thumbs ups? Probably not. All right, guys, I'm going to wish you all a great trading day. Stay safe out there. I'll be back with you for TGI Friday. Thank God it's Friday webinar tomorrow. Until then, have a great trading day. Cheers, guys. Bye.